It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast on our Tuesday morning. Yes, nice to get the Monday out of the way as we talk property news 7 days a week, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. And it is today, June the 25th. So we're getting very, very close, almost into July, which is a scary prospect. Coming up in just a moment, she is not scary. We're going to be talking with Veronica Morgan. And are you a person that relies solely on data when making real estate investment decisions? Now, that can be a bit of a dangerous trap without considering local knowledge. Yes, local knowledge is king. Now, while data provides valuable insights into market trends and property metrics, it often lacks this nuanced understanding of local factors, which is just so crucial for investment success. And investors who overlook local knowledge might misinterpret data and therefore make uninformed decisions. Has that been you in the past? You know, factors like neighbourhood dynamics, future development plans and community changes significantly impact property value and also rental potential, often not fully captured in data sets. So as I mentioned, let's catch up with Veronica Morgan from Home Buyer Academy there in Sydney. And we'll talk about this very subject about relying all on data in just a moment there, Veronica. But I do want to ask you this question, because yesterday we were talking about modular and prefab constructions, you know, from these factories that are equipped to build them, not on-site. Now, as a buyer's agent, I think some time ago, investors were doing this whole packaging up of these granny flats that were on the back of a section. Do you remember that?
Oh, I remember that. It was flavour of the month for some period of time, and it was even called the granny flat strategy. A lot of investors were getting sold up on this strategy, in inverted commas, by a lot of buyers agents. Actually, they were doing a joint venture with, say, builders of these small dwellings, and they were finding houses on blocks of land in council areas where it was easy to get approval to build a granny flat. And so they looked at the investment in terms of how much additional rent could they capture for that property. And so they say, an additional investment, you buy the property, you might throw in another 90 or 100 grand or whatever, package it all up, and you get so much more rent. They were getting a lot more rental, right? But they had doing so at the cost of capital growth. And what I say is that when you've got a family home on a block of land with a garden, there's certain expectations of the outside space, the inside space, and the balance and the flow and everything. If you plonk a granny flat in the backyard so that there is no longer a backyard, then overall the market, long-term market for that property is diminished. And these people would find that when they go to sell, there's fewer people that want them, and their capital growth is severely impacted by that decision early on to put a granny flat on. So it's this sort of sold as this great investment idea, but not such a great investment idea in most cases.
Yeah, that is always going to be the trade-off, of course, if you're going to put something on the backyard. Now, let's turn our attention to the dangers, Veronica, of investors using only data when they make buying decisions instead of local knowledge. I guess that you've seen it all, probably a little bit of the ambulance at the bottom of the cliff after the fact.
Oh, yes. I mean, I do quite a lot of strategy sessions for people who sometimes over a couple of decades, they've been making what they think to be wise decisions in investing in property, hoping that it does what it's meant to do and deliver, good capital growth over that time. So then they've got greater options when they get closer to retirement. Quite often I come across people who bought investment properties and then they want to upgrade their family home or even buy a family home. Some people have never bought a home to live in. They bought a number of investment properties. Then there comes a time they actually need to make a decision based on lifestyle, and they find that those investments have not performed anywhere near as well
as they hope they would. Quite often when I interrogate these decisions, it's because these investors, knowing that they didn't know enough about property investing at the time, they've sought to, I guess, do what, in inverted commas, good investors do, is to make decisions based on, in inverted commas again, the numbers and data way back when. But it's turned out not to deliver them with the capital growth and with the investment returns that they had hoped for. To give you a couple of examples, one is when one of the numbers that people focus on is yield. So that's the rent income as a ratio to the purchase price. And if that's too high, often it comes at the sacrifice of capital growth. But when you earn good income, good rent on a property, you're paying tax as you go, and it's not actually compounding, whereas capital growth compounds. And so it's a simple little thing. But if you look at those two types of rental return, the one that really makes you wealth is capital growth, not rental income. That's a massive mistake that a lot of investors make. And when you've got a long lead time, you want to buy a property for the long term, a good 10, 20 years, the longer you wait before you realise, the more it's cost you. So it's a really dangerous mistake. Another one that I see a lot of investors making is that they look at a suburb and they look at the median growth rate without understanding the risks associated with the median, but also the fact that the median is the midpoint. That means that 50% of properties perform above it and 50% below. And if you don't actually know on the ground local intel to be able to decipher and to discriminate between higher performers and underperformers, you can pick a fantastic area, but you can actually fail to buy a property that delivers what you could have achieved if you'd known how to choose a good asset in that area.
Yeah, so people right now, they're saying to themselves, well, hang on, that's great, isn't it? I mean, that's fantastic. Thank you for that, Veronica. I thought I was doing the right thing. Now, perhaps the data isn't to be fully trusted, but it's not so much the data not being trusted. It's the right mix of the whole local knowledge in the local neighbourhood mixed with the data. That's what you're saying.
That's exactly right. I think data has a purpose. And look, in reality, property data really reflects what has happened in the past. So in order to really make good decisions in the future, you need to understand what's happened in the past and be able to make a judgment call as to whether that in fact can continue into the future or whether it will change. And this is what a lot of people, I guess, they misunderstand too. They think that the data of what happened in the past will automatically predict what happens in the future. Or they might look at things like incomes, for example, without understanding, well, what does that mean? How do you look at incomes on its own? Do you look at the demographic of who lives there? Do you look at the incomes of the people who are buying there? Is it incomes of investors buying in? Or is it incomes of owner-occupiers within that area pushing prices? Like there's all these different nuances that you need. And you need to have a really solid understanding of data and be able to critically assess the data that you are using to build your decisions on. But when you're on the ground, you'll find that a lot of that macro information, it doesn't actually apply on the ground because the sort of property that is very, very hotly contested in an area is not going to come out in data. That is only something that local knowledge will teach you.
Yeah, that word nuanced, I mean, that is particularly apt for 2024, I think. And I've had this conversation with many property experts, and that is gut instinct. And some of the commentators will say, oh, no, you can't just sort of have it heavily weighted on, gut instinct. You've got to really, if it's my choice, I go with data. But that sort of comes into it as well. Gut feeling, so you got the gut, you've got the local property knowledge, the neighbourhood, etc., and then the data. And I think part of it too is that data has become so granular now that people look at it and go, gee, this is gospel, where the nuance of what you're talking about has to be factored in.
Gut instinct is really valuable if you have strong market knowledge, and then you can rely on your instinct. The reason that people rely on data is because they don't have that, and there's a lot of fear around making big decisions around property, and it feels like it's a sensible thing, and it goes to behavioural biases and the whole bit, right? The sensible thing is to rely on data, not rely on your instinct. But in reality, if you don't have the experience, you're absolutely right. You should not be relying on your instinct, but you shouldn't be then substituting that with data and making yourself feel better. There is nothing actually replaces getting on the ground and understanding an area, yourself. And this is where there's a lot of buyer's agents, for example, that don't do this. And really, I don't understand why anybody would even pay somebody who doesn't actually have local knowledge to guide you on how to buy a property in a certain area. I don't understand the thinking about that, because it doesn't make sense. You need local knowledge to make good decisions. But so it's all very complicated. But the problem is that I think a lot of people do err to relying on data, and that's very dangerous because they know that they don't know. And so that makes them feel better about whatever decisions they're making, but it's not actually giving them the knowledge that they need to make the good decisions. That's the problem.
Yeah, and just coming back to that point, if you don't know the local area and you're one of these new buyer's agents, what do? You turn to the data, and of course the person that is engaging with this particular person with no local knowledge will probably have more local knowledge without realising it.
And could be the case. And in fact, I've got so many examples of people that have bought in areas and then discovered things afterwards that locals knew about that area. And if they had known about that, they never would have bought that property. I was talking to an investor recently who'd bought in an area where there was a lead smelter. What they didn't know when they bought this property was that there's this zone where kids can't live. So they thought they were buying an investment property that families of people working at the lead smelter would be able to rent. And then afterwards, they discovered that, families can't live there because kids aren't allowed to live there because the soil's contaminated and so is the air. They didn't know that.
Gosh.
Locals knew that. Locals know that. But somebody who's not from the area, it wouldn't even occur to them. If you've never lived in a place that's had that as an issue, why would you even think about it?
Exactly.
And so that's the sort of example that I'm talking about that happens all the time. Another one, I spoke to somebody else recently who bought in a flood zone. She actually lived in the area, but not in this particular suburb. She couldn't understand why this property had passed in at auction. She thought it was so cute and all the rest of it. And then they went ahead and bought it without realising that the solicitor said, just warning you, it is in a 1 in 100-year flood zone. And they thought that meant that it might flood once every 100 years. Made a total mistake. Then every time it flooded, there was a creek behind the house, and every time it rained, I should say, she'd lie awake at night, absolutely petrified that they were going to get a call, because there were situations where cars would get carried off down the street. It was dire. Yeah. Yeah. And the reason it passed in, because all the locals knew that. She's come in and she only lived about 4-5 suburbs away, but she didn't know that.
Gosh, I feel like we could talk all day on this subject. Such a good subject to talk about. Maybe we'll do a part 2 in a couple of months' time. Veronica, great to chat. Enjoy your Tuesday. And once again, thanks for coming on to the Real Estate Breakfast this morning.
My pleasure. Thanks for having me back.
As we approach 1,000 episodes, a big thanks to all of our guests for their insightful knowledge, trends and forecasts. We look forward to another 1,000 episodes together.
The 60 square metres is pretty generous. You can get a nice 2-bedroom home into 60 square metres and have a bit of living space and have a laundry and a bathroom and all you really need. If you go 1 bedroom, that's plenty of space.
How does it all go? How does it work at your end? So if I was to say, okay, James, I want one of these 60 square metre modules, how long is it going to take you to sort of build a 2-bedroom for me?
So it depends on where you are in the production line. Typically there's a little bit of a wait to get to the production line depending on the workflow that we've got going on. But once your module is on the production line, we have 8 working stations. Each module spends 4 days in each working station. So 32 business days later, you'll go from nothing to a completed home.
We connect you to the best real estate information across Australia. The Real Estate Podcast.